So apparently Ken Griffin, billionaire owner of Citadel Securities and also Citadel, the hedge fund, so market maker, hedge fund player, not the most liked guy in the world of the apes. Well, apparently he was speaking with Bloomberg in an interview yesterday, May 19th, and so many people told me I need to react to this. So many were blowing this up and they're like, dude, what is your take on our boy Kenny here and what he said apparently about retail traders? Now, I have yet to see it, so I want to do a live reaction with all of you because I think it's going to get a little bit spicy.
And then the regulatory agenda for this year, they dumped 700 pages of new regulations into the market as my holiday present for all of us in this room. We got that present.
Did you read it all?
I have not read all of it. I have other things to do with my life, but I've read a lot of executive summaries that make me want to cry.
Just saying, yeah, regulations. As I'm literally the world's largest market maker, I have better things to do with my life. I don't care about those new regulations.
And it's a lot of regulation with reasoning behind it that I don't understand. Like, you often see regulations, you go, I understand what they're trying to get at. And for much of this, I don't understand what wrong they're trying to right or what information asymmetry they're trying to address. And so that's very worrisome to me because...
Honestly, if I was a multi-billionaire, I wouldn't see any problems in the system either. I'd be like, no, I think it's working perfectly. Like, what are we trying to fix here? I'm rich. I'm a rich old white dude with like some of the most expensive houses on this planet. I've been trying to buy a soccer team. I bought the Constitution. I feel like the game's working well.
The United States, with debt to GDP at roughly 130%, with a wall of entitlements ahead of us, Washington, in every dimension, has got to be focused on grow the damn economy. If we grow the economy, that will help on the inflation front. That will help bring more people back into the workforce. That will help us address the promises we've made to those who are going to retire. And yet, out of Washington, the current rhetoric and action plan is about slowing down the ability for our country to move forward. I mean, this idea that we're going to tax companies as being anti-inflationary is the most absurd concept I've ever heard of. Like, we're going to tax our companies that need to invest in CapEx, invest in hiring people, invest in training their workforce. All this will happen in smaller quantities. We're going to tax these companies, and we think that's going to reduce inflation? I mean, like, just go take out a simple economics book, for God's sake. So I really worry about where we are on the regulatory front right now because we need to go the exact opposite direction. We need to encourage investment in capital and in people to grow our economy to meet the promises that we've made to the Americans.
Seems like he's just really complaining that he maybe with new regulations might not be making the billions and billions he previously made. And I feel like he's taking a slight-handed dig at the fight against payment for order flow, which is making him billions of dollars a year.
What's the overall thinking on these retail investors, though? Are they back?
Here's a retail one.
Is it something?
You mean the whole sort of meme stock phenomenon that got Gabe in trouble in GameStop last year?
Yeah.
Gabe in trouble? I've been in trouble. Your boy is an outlaw. Was I late to Spanish class 4 times and did that get me in detention? Yes, I know what it's like to be in trouble. I think it's a little bit different when you blow up billions of dollars.
It's probably a moment in time. Replay the history. You've got this enormous stimulus program from the federal government, sending checks to tens of millions of American households. And a fair number of those households did not need the cash. They put it into the stock market. And people were looking for connection. They were looking for something to be involved in. You had the rise of the WallStreetBets and the whole Reddit phenomena. And I don't want to say our stock market devolved into entertainment, but there was certainly an entertainment dimension that came into play.
I awkwardly look at myself in the mirror the stock market became entertainment. Well, Ken, don't know if I can fully disagree with you on that one.
With money that was in some sense just dropped out of the skies into people's wallets. And they took a run at the stock market and GameStop and AMC and dozens of other meme stocks. I'd like to think it was a moment in time. I'd like to think that's the case.
I feel like there's a lot of logical fallacies in this. So he's saying because the stock market, which I would argue is a living organism transformed into something else, he's not happy because it's not the market where he performed the best in. Something happened that he wasn't a fan of, but anyone could say that at any evolution of the market. I mean, think about it. If you rewind to before the markets went digital and the brokers were making whatever amount of money to pick up the calls from the clients and buy this, sell this, and it was like more slow, the brokers probably didn't like that. It was a big shift. Or a lot of other people like talk to IEX. They're not going to say that the rise of high frequency traders were good. The market, like I said, is a living organism. And if you don't like the game, which is a continually evolving game, fucking leave. No one is forcing you to be in it. As long as we're playing within the rules of the game, that's the game. You can't like bitch and moan about what it was last year. The game changes. There's new players. There's new ideology. There's new methodology. So just because whatever, is he right that tens of millions of Americans got stimulus, which he's probably referring to as free money, and then they thought it was entertainment? Okay, yeah, that's true, but you can do that. Who gives a shit? Like, that is allowed. That is not breaking any rules. It is not breaking any laws. So why are you complaining about it? Because I know a lot of people who would be complaining about you and the rise, and I'm referring to Ken Griffin, as a market maker.
It's not how capital formation works best. And frankly, a lot of it came from a place that I don't think it was very healthy, which is like, let's try to take a firm like Melvin and put them into bankruptcy.
Whoa. The target was never at first. I hate when people argue that of the goal was not let's take down Melvin. The goal was let's save GameStop. There's over a 100% short interest. How is that free? And Melvin happened to be a large player who was adding to that absurdly high short interest. The initial goal was save GameStop, not let's destroy Melvin. No one even knew Melvin's name. Everyone knew GameStop's name. That, once again, it's kind of a bit of a red herring argument.
Like, great. So you basically help wipe out the pension plans of teachers?
Oh, fuck you. Fuck you. Did this guy really just say that? A guy who is obviously a fixture of Wall Street. Don't fucking come at us of wiping out teachers' pen. Did this fuckface really just say that? Wiping out the pensions of teachers. Dude, you are the symbolism of Wall Street. Let's talk about 2008. Let's talk about the tech bubble. Let's talk about the flash crash. Don't fucking come at retail traders who are on Robinhood wiping out teacher pensions. Fucking careful about throwing stones there, Ken.
You feel good about that? It's not Gabe's money that you're taking down. You're taking down the money of a pension plan that belongs to a teacher. So I don't think it wasn't a very good moment in American capital markets history, but I think you have to replay history and go, where were we as a country? And people were locked up in their basements, kind of losing their minds.
So it's a COVID phenomenon.
It's a COVID phenomenon.
Have you been on WallStreetBets?
Of course I have.
And?
There are some great videos of them trying to attack Citadel. I noticed that we always seem to stand in the end, but there's some really great videos done.
Order filled.
Such as? Now, everyone's going to Google instead of listening to what you have to say.
You can go Google and have fun on WallStreetBets.
Wow. Is it a COVID phenomena? Probably. I think it was a perfect storm of many things coming together, of people inside looking for a sense of community, looking for a way to make money. It was a cultural wildfire. It was a perfect storm. I don't disagree with that. But to somehow say that this short squeeze was an attack essentially against teachers, that's just fucking ridiculous. What a way to spin it. I'm just curious to like what the PR team was paid to come up with that line of bullshit. How did he say that with his straight face? Imagine an ape out there saying, I'm buying GameStop because I fucking hate teacher pension funds. Has nothing to do with this company, has nothing to do with Wall Street, has nothing with me trying to make some money to see what's going on in this short squeeze thing as I'm learning about the market. I'm doing it because I fucking hate teachers. I don't know about you, but I think a lot of us did that. How did Ken Griffin know? How did he knew we did that? Because I hated my Spanish teacher in high school. Fucking who told him? I can't believe you guys. You're letting all of our big secrets go.